Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, February 8th, Wednesday. We don't have any big important economic data for today. We just had NBA 30-year mortgage that shows actually flat from the previous one, but I think this is interesting from -9% to 7.4% in the positive for mortgage applications. So I think a lot of people is starting to think that interest rates are not going to be super high from now. They are already high, but they are positive that they will not increase much higher. So they are starting to apply again for mortgages and also refinance index. So this is quite interesting for the housing market. A couple of Fed speech today, Fed Williams and Fed Barr, right before and at 10, half an hour after the open. It didn't impact it quite much. They didn't say anything super interesting. And apart from that, crude oil, gasoline, and unless you trade actually crude oil stocks, and look at this, there's a lot of stock chains and import chains. So nothing big for today. So we are on the same theme that we got on yesterday with Jerome Powell. This is a theme for no one knows what the heck is happening in the markets. A lot of people are bullish because they think that we bottom already, and other persons, other traders think, other analysts say that basically we are just too high and we need a pullback, we need a correction, and Fed is going to continue raising rates, so maybe we can see a new low. So a lot of contrast in between analysts, and who knows. What is clear, and I think you all agree, is that the market is chopping around and it's just trying to take some levels and to balance in between bad news and good news. So before moving to the charts, let's start with the news of the day coming from Google. Google shares fall 8% following their AI event that they had yesterday, showing off their ChatGPT competitor. They call it Bard. I'm not going to go too much into detail, but basically they showed off a lot of the plans they have for the competition on this AI career, the AI hype that we have right now from Microsoft with ChatGPT. So they presented Bard, and they did explain a lot of things, super interesting. But what happened basically is that during an ad, Bard said inaccuracies and incorrect information regarding the James Webb Telescope. So you can search on your own, but basically it's clear that these AI bots, both Bard and ChatGPT, sometimes they provide inaccurate because they try to explain things not based on their background. So they basically not lie, but they tell a story that more or less matches what you are trying to ask to them. So in this case, from the James Webb Telescope, Bard tried to build some kind of story to tell a 9-year-old and basically provide inaccurate information regarding the exoplanet that was discovered not by James Webb, but by other telescope years before. So a lot of, I think, bad sentiment regarding Bard. A lot of people say that Bard is not good enough, it's not as good as ChatGPT, but let me tell you, ChatGPT also does that. They both provide incomplete and inaccurate information when they don't have enough information on their models. So this is today affecting Google quite a lot. So let's start with the charts. Google minus 8%. Look at this. Since news dropped, at 9 p.m. more or less. Look at this. They are super down on the day, rejecting, not even holding 100. 100 is right here. And I think a lot of people is punishing Google and not Microsoft. Microsoft was super high on the day. It was, let me tell you, I think it was like 3%. So since close, it was 330%. And since highs of day to day, until now, we are minus 3% actually in the green with Tesla. Those two are the only ones in the green. But I think a lot of people is punishing Google too much. That's my opinion, because both Microsoft and Google are trying to build a strong AI infrastructure, not only for the bots, chat bots, and who knows what and whatnot. So I think Google has lost an opportunity to do well in that event. And basically, this is just disappointment. And on the other side, Microsoft is building a lot of hype due to ChatGPT being, I think, right. A lot of people are in for the long term, given that Microsoft already has some ChatGPT infrastructure with OpenAI and also introducing Bing improvements. So I think it's quite punishing for Google, and the result is that basically Nasdaq tanked today. We are having a red day and it's not looking good. We were trying to build on this kind of, well, let me just do this. We were trying to build a bull flag, and it was looking quite well just here. We were trying to build this bull flag, and well, I was looking for 13,000 to look for shorts, given this pivot that we have here. I think that's a key pivot for a short, but we didn't complete the bull flag, and we just rejected due to Google and also Amazon selling off quite hard. And maybe yields are part of the reason why, but I think overall is just lack of tech strength. A lot of people are starting to realize that we are going to be at almost 5% during a year, and at that 5% in 12 months or 10 months until the end of the year, I mean, tech stocks are not going to do well. That's quite logical. It's common sense. So there's no way Nasdaq can hold these levels without a proper pullback. I'm not saying that we are going to see new lows. I don't think so. But it would be bullish still if we just pull back to 12,500 or 12,200 to these previous resistances now support this area. So it will look bullish also doing this pullback. So pulling back is not bad. This is not healthy move. I'm saying it again, and I mentioned it again. I mentioned it in my previous videos that this is not healthy price action. Look at this. There's no way we continue higher. So just relax, take your profits, manage your positions, and let the Nasdaq pull back a little bit. There's no way at 5% interest rates that these tech stocks are going to hold this high. So apart from that, dollar is building momentum, is actually pulling back a bit. And if we hold these levels, I'm looking for continuation to the upside throughout this week to reach this rejection at 105 and maybe reclaiming the 200 EMA. So I'm still counting on dollar now that earnings season is over, because strong dollar is usually bad for the market. That shows money flowing into cash instead of long-term risk on assets. And if you check XLK minus 1%, XLY minus 1.4%, and financials also in the red, these are all offensive, and we are not rotating because XLU, utilities, staples, and healthcare are also pulling back. But we will have to see at the end of the week how we end up dealing in all these rotations, sector rotations. Remember that if X utilities, staples, and healthcare are usually performing better than the techs and consumer discretionary, you know that money is rotating into the defensive, so maybe not looking strong for the overall market. So that's usually the deal and the way we should approach these indicators. And contributing to this inflationary fear is energy. Energy is up almost 6% in 3 days, and today is also green. Indecision in here, but we are back almost at 78. And remember that having high energy, crude oil, gasoline, and natural gas and all that will impact inflation, CPI, and PCE in the next months. So be careful because inflation might come back again. So watch those markets and also watch yields. Yields continuing holding up here. This is super bullish. The 2-year yield looking for 4.5%. I'm expecting these levels on the yields because they will continue higher. Fed, Jerome Powell has already said a lot of times that they are going to continue raising rates. 10-year is also looking, look at this, approaching this breakout. Will it break? I think so. So 10-year is looking again for this pivot at 3.8. And regarding terminal rates, well, something interesting. Look at this. We are starting to see, this is April futures interest rates. We are at 5.15, more than 5. So if we check, let me share this with you. If we check the expectations from the Fed Watch tool regarding 22 of March, we are pricing in, we are expecting 25 basis points. Currently, we are at 450, 475, and we're expecting 25 basis points to be at 475, 5%. And this is for March. The next one is May. So in May, 72% of analysts expect 5 to 525, another 25 basis points. So if you think that rates are not going to continue higher, don't be naive, don't be ingenuous, and just think twice about what Fed are saying and what these tools and media are sharing with you. Don't be too bullish. Things are going to go down eventually, because at these highest levels of interest rates, there's going to be pain everywhere. So if we double check this 525 at May, if we double check that with the futures, basically in April, May, we are already, the market is saying, yeah, we are going to be there for sure. So now we are correcting. The bonds market are starting to realize that Fed is serious. Fed is still super hawkish, and they will continue raising rates as promised. So don't be fooled by the media, by other newspapers and other analysts that are saying, yes, we are going to the moon, because there's no way at these rates that we are going to hold at least these levels. I think that we might hold on the Nasdaq and the S&P's previous resistances. On the Nasdaq, that's 12,000, and on the S&P's, we still need a lot of work to reach this December, to consolidate in this December peak, previous CPI, December painful CPI rejection. And I think we have a lot of potential pullback for 404 or for 4,000. And regarding the S&Ps, that would be 404, something like that. A pullback to the 200 would be super nice and quite logical. So this is the overall situation. I think markets are doing what they do best, is just control expectations. And I think today's was a quite clear short. Settlement was 12,700, and after the open, we started to see a lot of weakness. And the moment Microsoft started pulling back, Apple followed, Tesla reached 200, rejected, and Tesla is looking quite good. It's the most strong of today's tech stocks, 1.55. But I think Apple and Microsoft are correcting at these highest levels, and they are just showing that Nasdaq is obviously going to pull back to lower levels because interest rates are going to be super high this year. So start thinking about that and manage also your expectations. Follow this channel to be able to interpret these kind of things, fundamentals, technical analysis. Regarding the short today, this lower low was quite interesting. So once we rejected this, I took a short here and I wrote it down to, I think it was 600, something like that. Yeah, I think it was like right here. So very easy, not easy, sorry, very logical way of taking position with a stop up here at high of day. Once you understand how these markets are reacting to the latest news, and if we check the 2-hour, let's do it with I think the 5-minute would be enough to see this. Yeah, I think so. So let me tell you what happened. We were in a range. Jerome Powell hyped the market. It corrected. I have no idea what happened here, but this was not holding during today's overnight and pre-market. So it was obvious that we are correcting this kind of bounce. This was like a massive short squeeze. I don't even know. Sometimes this happens. Anything can happen in the markets. But I think this is just logical to be again in this range. Now, let me tell you, be careful, because it can pull back again. Shorts will recommit, I think, and we can go lower and break this support around 12,400. So this is going to be interesting for the end of the week, but for sure what is clear is that Nasdaq is showing weakness, and it is what it is. It makes sense what markets are doing. So as always, thank you for your time. If you find this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecasts, market updates, and market recap. I appreciate your time, but remember that the trading day is not over yet. Anything can happen. This looks weak. Don't get greedy. Manage your position and take your profits. That's my approach to trading the markets. Discipline and risk management are key for success. Stay safe, everyone.